Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Start off with forexfactorycalendar.com. For those that get questions, I always go into the filter. I take out the orange and yellow events. They don't carry nearly as much weight. You're welcome to keep them though. We are Tuesday, May 4th. Just take a look at the calendar here. We have a whole big week of news events. It's been throwing certainly the equity markets off today. She's seen some declines. For the first time when you watch the financial channels, if you have the opportunity to see like Bloomberg or Fox Business or CNBC, they only care about up. So on down days, it's like the world's falling apart. It's hilarious. Little do they know how much the markets have actually gone up over the last year. Most of them are probably reporting on this daily, and the vast majority probably couldn't tell you where the S&P or the FTSE or DAX or any of the big indexes around the world started off year end or ended the year. But for many was up. Lots of free cash. So we're looking at the 4th today. Currencies are on the mic for discussion. So tomorrow we have nothing going on. Before anybody down in Zealand or Aussie land, you had the unemployment rate come out. I'd have thought that would have been a lot better, actually. That's kind of surprising. But it's bank holidays today for many of the Asians celebrating Labor Day, Greeny Day, whatever the hell that is, and so forth. And then you got Thursday and Friday. Big news coming out of the British aristocracy. Now, the British economy, the monetary policy summary from Bank of England, as well as their policy report, asset purchase facilities, as you guys can see here, could certainly be a volatile day on Thursday. I'd be a little less interested if I've had a good week in trading, manually, or if my bots, whatever software, had a good week of trading. I'd be less interested in trading the rest of the week. Just my risk management advice to you guys. Typically, historically, for a whole variety of reasons, and this is really not disputable, in my opinion. Just generally speaking, it'd certainly be disputable on more of an individual level, but win rates in almost everything out there in currency land, whether it's manual trading or bots, whoever the hell's developed them, generally are much lower on Thursday, Friday. So if you've had a good week, you want to keep risk management at bay, don't trade these 2 days. Remember, cash is a position. Sitting on your hands is actually a trading situation, or it is a protection of capital type of risk measurement and or the move. So markets, let's take a look at S&P for those in the equity markets. Just a quick view. Here's the daily chart. Up, up, and up. Stair step, up, stair step. A little bit of a pullback today. Moving to the dollar. Daily chart, tradingview.com, tight range, real tight range. Notice the dollar reversed right at, which was more than likely a time or a volume-based point of control, which is the center point in this chart. These often can be areas where they stop and reverse, which we saw. Especially since we put a significant amount of time into this space, the center point of it becomes important, among other things, like these moving average lines that you see, both the brown, green, and yellow, represent 50, 100, and 200 day EMAs, and each of these candles is a single day. So green up, whatever the hell that color is, red down. So it's pretty simple. The support and resistance lines here that I have, and it is not difficult to set up a trading view account and duplicate these charts. It's actually really simple. There's a lot of developers in. I have a couple of developers that I follow, and they'll put out alerts for different stuff that, you know, shows up. Nothing's matching the criteria right now, but if we're looking for, you know, something like, yeah, let's just say the DXY, and you can actually search for developers that put out content relative to whatever you're looking for. It's actually pretty slick. They also have awards for some of these developers that put out some of the best indicators, which is cool. I think Desan should probably have been up for an award for this squeeze zones that you see right here, because they've been averaging pretty solid breakouts and or support and resistance areas. So that's a little bit on the dollar. Let's take a look at the euro. So obviously you'd want to see almost the complete opposite of the previous chart. An inverse correlation, if you will. Euro USD 120, tight range again. Really don't see a lot going on, but there certainly is a good chance that anything euro based, this is euro GBP here again, daily chart, still inside the range. I would imagine we will see something change a little later this week, maybe break out of some of this. So just be cautious. If you've had a good week, I probably would shut the systems down Thursday and Friday. Tight range again. GBP USD, GBP CAD, okay, had some wild reactions here. I know some of our software like Neo just traded this, or the Stratus trading the Singapore dollar. You're going to want to pay closer attention if you have a software that's trading a single currency, or I should say the majority of the trades in both of these cases is a single currency. It's not to say that those softwares can't take other pairs. So oftentimes I'll get asked for the question, what do I do? You know, what pairs do I favor this week? The answer always is, I favor the pairs that the developers talk about in their calls, because these guys have a lot more time than I do to go through the specifics, and many of them have automated back tests set up. But really, ultimately, it just really takes a matter of time to peel through all this and or the data of your automated back test to see which ones for your particular trading bot have the highest win rates, right? Even though it has the highest win rates, doesn't necessarily mean that's the currency you want to trade. Because if it has wicked volatility, like, you know, our favorite Widowmaker themselves, the GBP NZD, you know, this one blew out a lot of accounts in Einstein and Alexander last year, even though it was some great stats on this currency pair. I mean, it just went nuts through the pandemic. As you guys could see some of these lines right here. And, you know, the problem with a lot of software that I am hoping we can get away from, and, you know, Gearbox is obviously trying to mitigate this risk, is that when you have a shift in from just a particular range that a currency is trading, and then we're going into some sort of trend down or up mode, it should have the ability to morph. Now, that's a statement just generally made by your risk guy here, Steve-O, without understanding a lot of the metrics of how these algos are built. I just understand the generalities of how they operate. I figured once we get, you know, a good year under my belt going through this from a big picture standpoint, I'll start to drill down into understanding how these algos are built. Right now, I didn't want to get caught up in too much detail on that. I'll just leave it up to the developers to understand that, in my opinion, it needs to be able to recognize change in trend, or the fact that we're breaking out from some sort of tight base, like right down here in NZD, and then we're going into a trend up. It's not going to recognize this right away, but there's certain factors that let you know, hey, we're breaking out of a particular base. The same signals you use to make a purchase of an individual stock or a currency if you are manually trading with that kind of stuff, right? Just looking all the breakout stuff I've talked about in many different weeks, and then just recognize that we could be trending up. Likely it's best to just take the pullbacks and a trend up instead of fighting the freight train in front of it. So, so the Desan support and resistance lines are not for the question I just got before I forget. Let's go back to the main chart here. So it's Euro USD. You could just search for it. So you can just go into and search for it. You can add it as a, you just search squeeze zone. There's a bunch of them in there. So it's free. Let's see, Euro GBP. Let me touch on this. Still a tight zone. It seemed to me this line should be probably up here. You can always draw lines in here. I just try to keep these charts really clean. You just click an area and draw a line. I actually use a lot of these lines for some of my clients that are more, unfortunately, the by default, just being a client of First Down Financial, we're always talking about just buy points, right? So some clients, they're like, hey, show me what a chart with a buy point looks like, which is what I use these green lines for. Somebody wants to get into, General Motors, GE, Tesla, whatever the equity is they're looking to chase. We'll look for a buy point, which for many equities is much, much lower than where we are right now. So you can put the lines in with the question I just got. It's easy to just click a line and get rid of it. Hit remove. Q&A window is open if you guys have any questions, anything as I'm rolling through some of these currencies. Euro JPY. Now we did break out. As you can see, here's the breakout line. Some drawing lines today. Let's have fun. This is the horizontal breakout line right there. So, we came up and touched it, 1, 2, 3 times, poked our head above it, but we had a hammer reversal, right? Doesn't mean it's a breakout. It's falling back under. Now we came back up against it again. Doji right at the top. Tells us more than likely we're going to peak above it and or close above it. Sure enough, boom, right through it. This is a pretty decent move because very simply, there's a lot of stops up here. So once you get through these breakouts, a lot of times you'll have what's called a zipper move, which is just nothing more than, let me expand this out to show you. More than likely, when you have this type of move, you'll have a huge run out of it, because essentially whatever institutions and or bots that are predominantly trading this volume are going to go chase all the stops. It's basically what's called a stop hunter program. So once we have breakouts, I rarely will step in front of that, especially in stuff that is any kind of currency major or cross, anything that's in the ring, essentially. A lot of commodities, you just don't want to step in front of these breakouts. It's better to, if you really are a step in front of the freight train type of trader, and it takes a much better type of caliber trader to step in front of the freight train, you want to wait till it gets super stretched. If I was to draw some of these standard deviation, which is just stretching the mean and or Keltner Boulder bands, any kind of channel based bands, you would see that we blew through those to the upside on a daily. So unless there's going to be a reverse, there will be some that trade this reversal, but you can really get barbecued up here. And that problem I'd rather just do is buy the pullbacks. So in this particular case, this candle had gone all the way down here, closed somewhere around this 30 level or slightly higher. Maybe it was a doji that closed. More than likely, the next day is going to be up at your buy point. It's the exact same thing if this chart was flipped upside down and we were looking at a short. So for those manually trading, and this is, there are, some of this is rooted in some of the strategies that Arrow has for the different breakouts and breakpoints. We're looking just a daily chart. Obviously, this is more of a swing trade type of discussion. If I'm ever going to talk about setting up trading strategies, this is something you can also do on almost any time frame. Just understand the smaller the time frame, the more volatile and violent these moves can be. So when you're looking at weekly or daily charts on almost anything, you're seeing the analysis from a whole long period of time. Okay, so you went into indicators. and you searched for squeeze zone. Is that correct? Let's do a search. Hmm. I wonder if there's another way to acquire it. Do whoever asked that question, do yourself a favor and send, because I don't know the answer now, and just say, hey, one of the educators I follow, even use my name if you want, it's just AP Auvoria Prime. They use a indicator called the squeeze zone. I can copy this and send it to. I don't know how I would copy this though, because I haven't had the asked me to do that before. You know, it's almost like in a lot of other software I use, I can actually take a snapshot of the screen and email so somebody can actually see the squeeze zone indicator. So I'll just pop the settings window up like this and then take a snapshot of the screen, which I can do. And then email this. If you guys want to see it here, I'll just drop this into, let's copy the link. I drop it into the room. So just open up the chat window. You'll see this is the indicator. If you need to use that screenshot, get in touch with support and find out where the hell the indicator is. And then let me know. That'd actually be good to know. So let me just try that again. I just got another piece of advice. Just typing in squeeze zone. I thought I typed the whole thing in, right? Here you go. Anytime you see empirical FX, that's the sign. It's right there. So type the whole name in. Hopefully that answers the question. Thank you, by the way. I don't go in and add many indicators to this, so it's good to know. GBP, CHF. So we've done a lot of educational teaching on this. I've talked about this chart ad nauseum. If you want to see more analysis, you can go back in previous weeks and see it. But essentially, this is another textbook breakout led by some volatility, but essentially up. More interested in buying pullbacks, right? This was actually an excellent buy point right here. You would have got massive pips out of had you just held this for a number of days. But now we're in a zone, back inside a zone range. Would expect at some point, as long as the US keeps weakening and or Canadian keeps lifting, then we should probably touch this top point. GBP, CHF, sort of the same thing. Chart looks the same kind of because essentially the Swift weakened. Many currency strengthened, you know, Aussie, Canadian, certainly the pound, all been very strong relative to many other types of majors. GBP, JPY, tight range at the top. Again, just looking at daily charts here, USD, JPY. It's been a little tougher to educate, but what the teaching point I made on this back then is, let me just switch to pointer arrow. Right in here, you had a break of the trend. Kind of hard to see. I guess I can extend this line. This isn't the best drawing, but just looking to illustrate a general point. So this is a trade I took inside of client accounts long, that we actually still are long. And the reason I took this is we were in a very defined downtrend channel. Okay, this daily charts and makes this analysis more palpable, but also makes it a lot more solid. Just drop this line down. There you go. So I said, hey, we're looking like we may break out of a chart. I actually talked about this a lot. And I don't take a lot of currency long trades, but this is one of the ones that we figured we'd hold, mostly because the dollar's been junk against almost everything except for the yen. So this was almost like a gimme in many cases. You just understand the dichotomy of global currencies, so correlations. But we broke out. It came right back down. Now this line wasn't perfectly this moving average here, but we basically came down and said, look, if we touch and we hold on some sort of stall out candle pattern, which is what this little doji is here, this would probably be a pretty good long. So you notice I wait for it to break out, test itself that it's truly outside the area, and then you have a pullback. And actually, you know what? Now that this is broken higher again, I'm actually going to take a quick snapshot of this. I really think this is a good teaching. Actually, I can probably post this to Twitter as well. So let me just set that up. There we go. Cool. So I'll drop this in the room if you guys want some good teaching material to print out. In my early days of learning to trade back in 2000 through 03, I have books of charts that are probably 2 feet thick. I still carry a lot of these today because there's a lot of good pattern recognition. The only problem with today is that many of these chart patterns are becoming a self-fulfilling prophecy because they've been taught for so long. But the shocking thing is they still work. You'd think that it would be completely obsolete by now, but these patterns still work, which is great. So, and so we got to break out, and then you know, drawing some half-assed trend lines like I did. It's really not important how well the lines are drawn, so you should have an idea of where the upper and lower trend channels are. Even extend this line up like this. To connect these 2 points. Instead, I want to look to connect the bottom of the candles roughly. Doesn't have to be perfect. Even draw it down like that. Just an idea of understanding how trend works. And ideally, if you're a developer, this is the kind of stuff you want to program into your software, you know, like solving for if this happens or if these factors happen. We want to change direction of trend to up, but be on high alert that we could always fall back into the direction of this current downtrend, which was lasting quite a long period of time once we settled out in May and April of last year, even arguably not really truly settling out until about June. And then it was just in almost a perfect textbook downtrend channel. I actually like this. Let's take another snapshot of this. Cool. You guys are getting the bonus plan today. It's typically how I teach as an educator from the old days. Just snap a pictures of chart patterns live as we're seeing them unfold and using them as analysis to study. Now, it would seem to me, just using the squeeze zone stuff, we probably should have a couple of lines forming up here but I guess the factors aren't perfect for some zones to start forming, which makes a lot of this analysis a lot tougher, right? So you could just do simple stuff like, well, there's probably it was just a big bunch of candles here, so we probably got a support line here. Maybe that's why it bounced off. I can't be 100% sure on that, right? But if you're still long here, you've taken a lot of profits off along the top. This is probably a good 15% run just in this position alone for some of our clients. We took a lot off the top, and we took a tremendous amount off the top figure, and we were really stretched to the point we're going to fall back in or revert more back to the mean of where these trading volumes were. That's kind of what you saw take place. A USD CAD. Now with this one, the interesting thing is we've dojied off the bottom, but we haven't broken down. And I think a lot of this just because the dollar is in I don't know, indecisive 5 or 6 days of holding pattern, if you will. So I think that looking at this from the perspective of just, what are we looking at? 8 days? Is that right? A little more? It's holding. But you're going to look to a weekly chart on something like this, you can look back a little further. And here's the cliff right here. We're basically at it. We're at the cliff. Could go a lot lower, but it took the ridiculous moves of 2015. It was a lot of really big events that unfolded here that took a lot of currencies up into, in some cases, down below ranges that they hadn't been in for almost the previous 10 years. So you can go back to a monthly chart on this, set the scale. If this looks like crap, you can see the whole history, and this dog's been trading since just before 94. See the whole pattern of everything that's going on. So there's a lot of really great long-term analysis. The problem with this kind of stuff, right, is even though it's, could be a self-fulfilling prophecy on long-term charts and all that, you're better using other analysis than just this area. Why? Because it was so long ago. The chances of whatever institution having any kind of position still held from this period of time is slim. So other time frame players in many cases are long-term holders. Who knows? Maybe Berkshire Hathaway as a position they took short the U.S. dollar, versus the Canadian way back in 2002. By the way, if you guys want some comedy, I would look up, you can find it on YouTube. I would look up all the past, or just forget about the past. Start with just the Berkshire Hathaway annual meeting. And just the two old farts just sitting up on stage. Just hilarious. A lot of wisdom can come from these guys. But, it's like asking a guy that used to race F1 in the 30s, what does he think about all the new car technology in F1 coming out now in 2021, right? He's still thinking about building cars with old technology, even because he made a lot of money racing teams, and right, so he's very arrogant with that, and more than likely does not understand one iota of new technology with new cars, right? It's like asking Warren Buffett, what the hell does he think of crypto, or Charlie Munger, who's even more smug about the subject than Buffett is. But I thought it was interesting, some of their replies, and Munger talking about how the erosion of our citizenry comes from too many people investing in crypto. It's actually kind of funny. I usually side with the old school guys, but not in this case. Matter of fact, since we're on crypto, let's take a look. I do know we have some crypto stuff coming in our potential pipe. So spread the word. What, where, how, who, when, why, I don't know. The analysis of it, certainly, right? I can do that. I mean, that's no problem. But in terms of like offering new stuff, I think the problem that, many of you just don't want to hear. And by the way, this is just, I got to tell you, this has just been absolutely crazy in our portfolio. It's just been bananas. We were accumulating this around 18. This is a Playboy Entertainment Group. It has nothing to do with the magazine anymore. It all has to do with licensing of their logo. So apparently the Playboy bunny ears just absolutely taken off overseas. And it has brought a tremendous amount of revenue. I mean, these guys have had almost a quadruple in revenue to over $150 million from virtually nothing when Heft passed and the magazine died. And the group, which is the parent, which is mostly licensing and entertainment, restaurants, and mostly just selling access to the logo, right? Who knew? Getting rid of the magazine and all the porn stuff that went with it, and just focusing on the brand as a whole, and putting it on like everything from handbags would just be an explosive idea. Gotta love it. We're taking profits. Don't be buying this here, by the way. It's overpriced. Let it come back down to earth, but keep an eye on it. So what happened to, I think my partner was in here messing around with my symbols. What happened to all my currencies? You guys are forget it. I can go over those charts if you guys want to take a look at Bitcoin, but it looks like it's going to break down. Hell, let me just add it. I took it out. Let's take a look at here, though. I just look at the Bitcoin USD. This is data coming from Bitstamp here. I'm still saying we see this area. Been saying this for a while. That would be my buy point. Wouldn't be up here. Because if you think about this, just in everything I've been teaching over the last year, this is the breakout point. You see that this came on volume, right? So one thing we can do that is a little more difficult to do in the currency space with crypto, because I do not trust the volume on TradingView. So as you know, I talk a lot about volume, but just not really in currency, right? But when you see a big volume spike like this day, let me move back to the crosshairs. When you see a big volume spike like this day on a breakout, and then there isn't a lot of pullbacks, we come back down against this point right here. Volume dried up. There wasn't a lot of selling. Until somebody's defending this level. I don't know who it is. Could be Tesla, could be some large institution, could be an amalgamation of these groups. But that's kind of what's going on as far as the coiner. But I do like the one piece of analysis that I will leave everybody with in this discussion of crypto. You know, there are a number inside of AP that will take, in one gentleman's case, name withheld, he basically takes $1,000 and drops it into almost every new coin that hits a decent trading exchange. So a lot of this crazy stuff that hasn't been listed, SafeMoon and some of these other cryptos, you really, they sort of get their day in the sun when they go public, so to speak, right? And it's called a listing. Whether they're listing from Bitmap, Binance, Coinbase, you know, hopefully all of them, right? And it hasn't already run up too much, then it becomes essentially like a listed crypto. And then he'll go in and buy $1,000 in each, knowing that maybe of 30 cryptos, 25 of them will just go poof. And if you think about it from and obviously this gentleman has the ability to do this, but if you think about it from a risk management standpoint, it's the exact same process that a VC or a private equity firm or any of these venture cap guys or the Shark Tank guys, and there's Shark Tanks all over the world in different shows. It's all the same thing. They throw small pieces into what they feel to be a decent idea, and this is more applicable to the venture capital group, especially all those rich guys at Silicon Valley. They'll drop X amount of dollars, typically in a fairly even investment in all of their new, and it may take 3 or 4 years for 1 or 2 to break out. They only need one Google, right? They only need one early stage venture in Zoom or something related to that, or any of the social media platforms to break, to become very wealthy just with the one break, even though many others evaporated, right? Seems strange, right? But the key thing is the small piece into each, which I thought was interesting. So had a opportunity to talk more with this guy, Will, coming up soon, just to get sort of his thoughts in crypto. I can at least share that. Do note the big cautionary disclaimer in this whole thing is that as I'm getting into crypto, I'm nowhere near an expert on it. So I could be a complete piker in these discussions. So you want to make sure you take a lot of what I'm talking about in this area with a grain of salt until I get up to speed. Chart patterns, not an issue. I can see through the tea leaves on this stuff. The problem with crypto, as Berkshire, I should say, the Hathaway guys, both Warren and Charlie talked about this weekend, is that there really is not a lot of very secure ways. I know there's audits with Serptech or whatever the hell those guys' name is and all different stuff, but the problem is there just isn't a lot of solid foundations you can pull, right? So if a company goes public, like when Zoom went public, right? We know where the company is. We see them on analyst calls. They have a formal auditor that audits their books, right? And we know they exist. We use their products, right? The problem in crypto land is outside of Bitcoin and certainly Ripple and a number of others, Ethereum, you may use their crypto, but outside of that, the vast majority of these coins, I don't know whether it's a Ponzi scheme or not, right? You have the masses get on this particular auditing site and that, and I think this is why early or people that are very concerned about their money just going poof in crypto land will open up an account, as a U.S. resident, for example, with Coinbase, right? Still think the IPO is overpriced as hell. As you can see it right here, it's probably going to get down to the 200s. But surprisingly enough, there's probably still bag holders up here at 420. So this is another great story in risk management, even if you drop it down to a 4-hour chart. Just would not want to be an owner at this point, period. So, and this is another example of the venture capital guys, just like with Airbnb and a whole host of other companies that went public. They left the shareholders as bag holders day one, when chunks of them probably liquidated. Now, do understand with a lot of these VC, private equity, and early stage investors, they are held to what's called restrictions after the stock goes public. So there's in many cases only a small amount of or a group of tranches of equities that they hold, they're allowed to liquidate. Much of the stuff has to be restricted. But just know, I don't want to be the guy owning this at 420, right? So I'll talk about all this stuff more and more as we go forward. If you guys have questions on crypto, just understand I am a beginner. I am an expert in charts. I can see through the tea leaves of crap. But at the end of the earth, with a lot of these cryptos, especially ones just hitting the market or just analysis of others, I just don't know if a lot of this stuff's going to be around, right? And the risk is really right there. So, many of these cryptos will have what's called coming to Jesus day. I can't tell you when or how long. I'm just knowing that at some point it's going to happen. And in many of these exchanges are going to completely blow up in this event. So I don't know if it's a flash crash type of event or what have you, but that's why we're very tepid at the least as an institution as far as our clients at First Down getting into this area. So with that, I wish everybody a great week. If I didn't cover the pair, make sure you ask me about it. Happy to go over the chart. Quick look, see what DXY has been doing since we spoke. The beginnings, we're just sort of holding stable here. Do note, I don't know if you guys saw this. This is I have like a bazillion people I follow here on, but do note that the Neo guys are putting these notes out more and more often. I've heard a lot of people complain inside the Neo chat room, which is now up to almost 1,000 members, that we should really see something every day from them. I actually disagree with that. I think generally you're not going to want to get too mired and turning ones off and twos on. I think just look at what's going on for the week, right? Know that this, along with Stratomus, trades a smaller time window each day. And I wouldn't get too caught up in this. If you just are not concerned, or you're concerned about the levels of what's going on inside your accounts, I can always tell by the people that post in these rooms, the ones that are the most concerned are the ones that cannot afford to lose what they're trading with. So they should not be trading it, right? We have little sympathy for those that have heard that statement from me now probably hundreds of times over the last year and continue to not listen to it. I have no sympathy for it if your account blows out. Okay, so just trade with money you can afford to lose, right? You traded in mode 1, you know. And other than Stratamus, which I haven't too much time to pay attention to, I know Killian was sick for a while. Now he's better, and he had, and it's up on the YouTube channel for that. They have the traders chat and so forth, but make sure you read through and go through his YouTube presentation on that. San's got changes coming for variable. Obviously, stay on top. If you're in all 3 of these softwares, as many of our subscribers are, you guys got to listen to the developers' calls. I can't summarize, nor do I forward that much anymore a lot of their notes, because I'm doing this. It's almost like I'm creating a crutch for a lot of our subscribers. I have to teach you guys to fish on your own. So that's why you're not seeing a lot of this coming from my channel anymore. That'll force everybody to watch the developers' calls. And in many of this stuff, you can watch while you're driving around your car. I'm not saying look at the screen, but you can absorb the vast majority of the content with it just playing in the background over your car, right? You don't necessarily have to watch the video, and you're going to know what's going on, what changes, what updates, VPS reboots, all that fun stuff. You'll be able to soak a lot of that up, because I always hear, I hear this from a lot of people, is that I just don't have the time. And you've seen the experiments, I think, with guys like James Clear, Atomic Habits, one of my favorite authors. He's taken even the busiest people's schedules and he's completely broken it down for them on a live reality show. And they have all kinds of time in there. So it's all BS. So if you have some time where you're driving around and you're stuck in traffic like we are here in the Los Angeles area, you get time sitting around your car. I should be watching more of these videos and taking my own advice, right? So, but anyway, everybody have a great week. May the trades with you.